You won't really know when as we say in the business, that they don't ring a bell at the bottom, so you won't really know for sure. We think the best move for investors is to start moving in with cash a little at a time. A little bit at a time as we get the rest of the tech sector ultimately reporting. We think it'll be, if not the bottom here, we think we're trying to put one in, and we'll see some higher prices into the end of the year.
Ian, as an economist, what do you make of all the anecdotes we're getting out of corporate America? Not to mention the Fed Beige Book, which is always a great read, with some of the warnings on higher prices and tariffs. Is it making a dent in the solid growth we've seen?
Oh, only at the margin, really. For some individual companies, it's a really big deal. I would not want to be an electronic equipment maker right now because they're suffering from the tariffs unquestionably. But from a macro perspective, the tariffs so far really aren't very big. And we're going to report this week a GDP growth number close to 4% for the third quarter, after a similar in the second quarter. These are pretty solid numbers. They're generating very strong earnings growth across the corporate sector as a whole. So I don't see too much to worry about. I understand markets are uncomfortable with the rise in treasury yields that we've had recently, but I do think it's time now to get close to the bottom, and I'm not surprised that the market's rallying today.
Ian, one topic that's kind of been taken off the front page is the president's criticism of the Fed. You had a tweet yesterday sort of talking about what's at risk for Powell if he does decide to pass on December. And then today the Journal op-ed page takes the president to task with a piece entitled "Trump Flunks Fed Politics." How much of this really matters?
I think it does matter if the Fed doesn't hike in December, because the signal would be that they buckle to the pressure from the president. The thing about this is that presidents have always had views on interest rates. It's not like they don't care, but they've always been rather more subtle about the way they approached it. What we now have is an open attack on the Fed, with the president calling the Fed loco and crazy, and publicly kind of musing over whether he regrets appointing Jay Powell as chair. And markets are very disturbed by this. And what it does is it makes it all the more important that the Fed does what it said it was going to do, which is to raise rates in December, because if they don't, you'll never be able to trust what they say again. And so the president has put the Fed in a very awkward position.